Troy, how are you, sir?
Doing well, very well, Matt. Good to be with you.
Well, I'm glad you made it because you've been traveling the world. I think you were down in Australia, weren't you, for the Adelaide conference and then sort of bouncing around the
Yeah,
Asiatic areas. Yeah, how was it?
yeah, it was great. The reception was very good. We have a shareholder base down there, and the shows that we're at and the reception was fantastic.
And because it's slightly more industry than investor in a sense, but there are a lot of companies represented because a lot of kind of government bodies are sort of leaning in, certainly from the Aussies. Who did you see and speak to?
Yeah, it seems like the space is changing globally. I think that the sentiment that we're seeing globally is certainly trickling its way into Australia and into Australian politics and policy as well, which is rightfully so. You look at the metal endowment that they have in that country, and it makes a lot of sense. So, I think that the sentiment's changing, which is akin to what we're seeing globally right now.
Yeah, and I think obviously Labour Party suffering a few shock defeats as well, and they've been the ones, I guess, holding up the party over there. We'll see how that plays out with the general election, middle of next year. Certainly good news today. I mean, the other kind of country that's kind of getting back into things with nuclear is Japan.
Yeah, that's right. Off of the back of energy policy, really, right? And you think about successful restarts and a schedule of continual restarts out of their nuclear energy space. You look at that sphere as a whole, and typically in the last cycle, number of entrants, number of positions, within the upstream space, within the mining and even as upstream as exploration side of the business, exited some of those positions post Fukushima. But naturally you'd expect that a number of groups would be turning their attention back to kind of the fuel cycle and upstream space in the fuel cycle, in line with the energy demand and the demand that they'll see coming up out of that baseload energy source that they're turning back on in Japan.
Okay, well, pleasantries out of the way about your traveling over the past few weeks. I want to get into North America. Right, news hot off the press today, obviously, is the fact that the Russians have announced a temporary restriction on enriched uranium coming into the US. I think a bit of a tit for tat response to the US banning uranium imports from Russia, albeit with waivers earlier this year. So how do you read that situation? Markets seem positive.
Yeah, markets seem positive off the back of that. I think it highlights to me, you pull out of that a bit and look at it from a high level, and it really highlights a couple things. It highlights the fact that I think there is real supply side scarcity in the market, right from uranium supply right through to enrichment, fuel processing, etc. But it also is indicative of the current market that we're living in, and that's really a bifurcated uranium market. We've been talking about that now for a number of years in the sector and in the space, and this is just putting a point on that, right? Where you're seeing, I think recent stats would say that, the demand coming out of OECD nations is about 75% of the demand, whereas, in the mid 20s is where the supply comes out in that balance. And so, yeah, it should, my view is it should be received positively in the markets because it highlights a bunch of the supply side scarcity that we're entering into right now.
And I'm just wondering what sort of the longer term implications are, because obviously the US, Western countries are not set up for this enrichment requirement needed, and it's going to take a while to kind of get things up and running to the scale that's going to be required. But this has been a long time coming, right? This should be no surprise to anyone, and quite frankly, I'm admirous of the restraint of the Russians not to have done it sooner. But here we are. We find ourselves in a predicament which we've got to try and solve for. So, what do you think the response from the US, but not the equities, but in terms of the industry response?
Well, the industry response, I think it's going to have to be clear. You're going to need to onshore that fuel fabrication cycle and that capacity onshore domestically in the US or within the European sphere, certainly, right? When you look at Western Europe, and I think that's happening. That's happening. You look at the plans that Iran has. You look at some of the plans domestically in the U.S. And you need to address that part of the market, address that bottleneck, so to speak, that's coming up, and it becomes a pinch point within the fuel cycle. And you look at that, and from enrichment to fabrication to even conversion. The price in that segment of the market is, touching at or on or above all-time highs. In our view, from an earlier stage, from a upstream in that cycle, from exploration, resource development, et cetera, is that then is going to naturally translate downstream into increased uranium prices.
I mean, it's a fairly fluid market at the moment, and maybe this is kind of the kick up the backside the space needs. You mentioned Iran out there. They're obviously reported their sort of deteriorating financial position at Somer in Niger. But on the other hand, they're also making plans to begin their own uranium enrichment into the US. They are aiming at 2030 type deadlines. Again, are we going to be able to move quickly enough? It's not a case of will we start? Yep, we will. But is it going to be feeding into the market quickly enough?
Yeah, that's the question, and I think it comes with. I'm probably biased that because of where we sit in the cycle relative to the rest of it, and I look at enrichment. Enrichment and that side of the cycle can be solved with will, political will, and capital. It's a known technology. It's a known processing technology, etc. From my perspective, I think you look within that time frame and then a little longer further out, and the more challenging part of the space is actually where is the fundamental U3O8 uranium supply going to come from to feed into that midstream space. That's not necessarily solved with political will and capital. That takes discovery. That takes good technical teams. That's based off a mining cycle that you can't just decide to build a mine. You first have to discover a deposit, then build that deposit, de-risk it, enter it into a regulatory process, into production, etc. I think that from my perspective, the midstream space is interesting, but the upstream space in terms of exploration, discovery, development, production, that's the one that from where we sit, we need to get serious about in the very near term.
Yeah, you need to get serious, and I think the governments are getting serious. Because whilst we've kind of got groups like Atkins, Realis, and Westinghouse, and Iran are trotting around the world selling their nuclear capabilities, we've got to feed the beast, right? So let's talk about in the context of that North American story, right? So the US and Canada, I'm going to view them as one for this conversation, because it feels like the US has got. Well, they got a longer road ahead of them in terms of producing their own U3O8, right? Mm-hmm. The mines aren't there. They're start mines. They're small mines. It's low grade, et cetera, et cetera. The Canadian cousins or the Canadian neighbors would look to kind of feed that requirement. So the U.S. government is talking positively. The next U.S. government, Trump is talking positively. He referenced nuclear specifically in his acceptance speech, and energy is his solution. Energy cost is his solution. So what are the knock-on effects for companies like yourself and for the Canadian industry as a whole, do you think?
Yeah, the Canadian industry, I would call it the North American sphere, right? Because I think there's a broad realization that given the demand out of the U.S. market and the Canadian market as a tie-on to that, went from a period, say 3 or 4 years ago, maybe 5 years, where we had demand destruction in this space. That has since switched in a material way to where we're talking about reactors closing down to now reactor life that is being extended now to a position where we're really, seriously talking about, not just talking about putting into action plans to double and then, double capacity, double production, nuclear energy production by 2040 and then triple by 2050 domestically within the US. You look at the supply side of that, the supply side, as you mentioned, it's going to take a whole of North American, kind of sphere or even beyond that to satisfy the demand requirements. It's a fantastic time to be developing U.S. assets, it's in turn a fantastic time to be developing Canadian assets, because the reality is that it's going to take all of the projects that are in planning in the pipeline in that early stage of looking forward to production. They're going to need to come online, and we're going to need others to come online in addition to that to satisfy the demand moving forward. You think about the doubling of nuclear energy capacity in the U.S. and it's currently the biggest uranium market globally, sitting at around 50 million pounds per annum. Production profiles out of the U.S., in the last cycle, satisfied plus or minus 10% of that demand. Then you have to point to Canada, right? And you have to point to jurisdictions like the Athabasca Basin. I think Nunavut is a very fascinating jurisdiction, has a high metal endowment, opportunities in Nunavut to develop assets, and really across the uranium endowed jurisdictions within North America. We're going to have to get on our horse and get moving to satisfy this demand that's coming up.
And for sure. And I think, even if we kind of go down that track and everyone kind of accelerates into this cycle, I look to things like Paladin recently, kind of not hitting the greats, not hitting the numbers. Look at Peninsula, just put their, delayed another couple of months on top of the previous 12 months late and the previous 6 months late. Yeah, it's not going to be an easy ride, and not all players will kind of get to the end there. And I think part of that is kind of the skill sets available just aren't there at the moment. So, I mean, one's what do you agree with this on the supply side? It's maybe not going to be as advertised. It's harder to get there and get the numbers. And secondly, do you think the kind of skill sets are going to be there to kind of maybe help improve the chances of that improving?
Yeah, two challenges that are linked at a certain stage, right? You look at the spectrum of uranium assets, from within the supply chain right now. It goes from low grade ISR, relatively, low grade, and then you go into lower grade bulk tonnage type operations that you see typically associated with Africa, obviously with some exceptions. And then you go into the North American sphere, and you have lower grade ISR, lower grade sandstone hosted deposits across the U.S. into the Athabasca, higher grade, massively high grade deposits, massively high grade deposits in Canada that are really orders of magnitude higher, right? And so the opportunity to bring on large scale, chunky production, big production units, really come, the opportunity here is to bring on more high grade deposits out of North America and out of Canada. And then the skill set, the skill sets required. We're front and center in that. We're located in Saskatoon, Saskatchewan, and there's a pretty high concentration of uranium subject matter expertise in that province, in our province, and in our cities. But even with that, we have seen an exodus. It was a long night, so to speak, in the uranium industry for a long time. And so it's not just the explorationists and the technical, early stage technical people and engineers. It actually comes down to people that have the skill sets and necessary requirements to actually get these things built and into production. You have companies globally that have retained, some of that expertise and are in a strong position. You have companies that have been building through the previous cycles and the previous cycle and doing resource development that have been able to attract talent in front of a wave like this that's coming, that I believe are in a strong position. And then, geography comes into it. If you're in the center of an area that has a concentration of people that have been working and understand the space, it's to your benefit. But as you say, that it is a risk to industry, because not all groups, not all organizations have access to the people necessary to drive these things forward.
Yeah, and I think the other thing that the space has really struggled with has been access to capital. Juniors specifically, it's been a tough few years. People have been crushed in the markets, and they kind of left the markets, and they go, right, value destruction. I'm not confident here anymore. Certainly retail, even funds. Looking around at the way that companies are having to react and adjust to being able to access capital, we're seeing the kind of battery metal guys kind of team up with industry and try and get some interest there. If you're sort of downstream, it's been a lot easier to kind of access capital and funding from governments, grants from governments, tax incentives from governments, and industry. But upstream, uranium producers, the supplier, the kind of the lifeblood of the industry, it's been a little bit harder to access that capital. Do you see government, do you see industry starting to move upstream a little bit more going forward, as they have done in the EV space?
I think the potential for it coming is real. You look at where, recent news out of the uranium space or out of the nuclear energy space, right? And you see major tech conglomerates and major tech companies that are moving into starting at the high level with energy, right? So they're starting at SMRs and nuclear energy facilities, 3 Mile Island, right? Like who would have thought that you would see a tech company partnering up with 3 Mile Island to advance things forward with a power purchase agreement, et cetera. So I think we're seeing it start. We're seeing it start downstream with nuclear energy. Our view and my view is that there's going to be a realization that, when you look at then securing your energy future, whether it's as a company, as a government, as an organization, it starts obviously with the energy production, but then you have to turn your attention to the supply chain. And there's supply chain issues like we talked about, and that's in the midstream space with enrichment, but even more squarely, I think it's on the supply side. And so I think it'll be natural in the cycle, as the cycle continues to evolve and emerge, that you will see that participation move upstream into the supply side. And, then in turn, the access to capital, I think that very good projects have access to capital, as they always will. And, from our perspective, the thing that has probably put us in a position that we're in right now, where there are a few uranium projects that are ready to advance and ready to move forward, is a function of market reaction to the collapse in the uranium price. And so, equity market participation has been lower through the uranium downturn. As a function of that, exploration expenditures, we're at 4 or 5 years ago, we're at all-time lows within the uranium space within Canada. We're seeing that pick up, we're seeing that increase, but that's, as often happens, that becomes a trailing indicator of demand, and are kind of offset. And so, but in turn, then that sets up for a very strong correction, and that's what we look to moving forward, where right now you see the equities markets that are trailing the macro sentiment. They just are, Cameco's participated well, the leading names in the space have participated well, but there is a big gap right now between the macro sentiment and the underlying equity performance.
So, all the drivers are there, right? See, we're talking about these kind of large global nuclear energy build-outs to meet, whether it be, climate goal changes or adjusting and increasing power needs from people like these sort of, hyperscale data centers, et cetera. But it's all it's quite nascent, right? The energy goals thing is a new thing. The data centers, AI data centers, they are a new thing, and everyone's going to have to kind of feel their way around for a bit. So do you therefore, I hear what you just said with regards to the kind of funding thing, but do you expect to sort of see the old model of we need term contracts in place to be able to kind of give to the bankers, to give them confidence that there's a buyer at the end of this? Do you see that model changing and evolving, or even being eradicated as utilities have to compete with these Metas and Amazons and etc.?
Well, hey, that's a
nice problem, right?
It's a nice problem, but you step back and just to put a point on that, Matt, you start to think about this space fundamentally, okay, and how this industry has went for decades. Started off in say the late 60s, early 70s with large scale build out of civil nuclear reactors across the US and the European sphere. That was a major demand driver. And then demand in the space was relatively flat for a long period of time. And from the 70s through the 90s, supply outpaced demand. And so there was a big overhang of supply in the market that persisted. And that was then compounded by the Soviet Union, the wall coming down, and then you had megatons to megawatts. So you had another form of secondary supply in the market that persisted for a long period of time. And then again, you had Fukushima, which was an incident-driven event that resulted in additional supply in the market. That secondary supply has since been significantly curtailed. Driven in part, helped out by the leaders in the space. Cameco taking MacArthur River down. And implementing a strategy there to deal with secondary supply in the market, oversupply in the market, and then in turn, you have new entrants like Spot, for example, the Sprott Physical Fund, for example, sucking up about 65 million pounds out of the market. So that's a long way of getting to, is this thing going to change in the future? Well, we're entering into a period of time right now, which is directly analogous to 2006 with the amount of contracts that are becoming uncovered within the market. And a return back to that long-term contracting cycle is coming. It has to come. The amount of pounds that are uncovered in the market is real. And what that means in terms of how utilities are going to be forced to contract in a world that is now different. And the reason it's different is that you don't have a bunch of secondary supply in the market that's mobile. You don't have, you don't have a Kazakhstan like in the last cycle that was wrapping up from 8 million pounds to over 70. This is a market that is now switched to risk on the supply side. As opposed to demand risk side. And so I think the balance of leverage and the balance of power within this contracting cycle has shifted and has shifted on the supply side. And I think that that's going to result in having to rethink the way that long-term contracts are structured and that this contracting market works.
Right. But it's not quite there yet, or else prices will be flying through the roof, right? So it's in motion. It's moving from buyers to sellers market. We are seeing, hard-term contracts being signed with all the bells and whistles associated with those things to protect the upside, downside, etc. A spot price is not moving. Unfortunately, that's the thing kind of people look to as a kind of reflection of the health of the market. On that basis, people would read, we're still sitting in this pregnant pause period. It's not quite there yet. So what's kind of got to give for that movement fully into kind of seller's market, supplier's market?
It comes back to contracting cycles. I believe, you look at where we're at relative to a contracting cycle, we're nearing that position that, the contracting cycles ultimately end up influencing and driving the spot price. And we're at the precipice. We're right there. But as you then equate this back to the equity space, and us in industry, we like to sit back and say, hey, it's a term contract price that matters. That's been ticking up continuously all the time, and that there is reality to that. But what is also true is that the equity markets respond to spot price movement, and so I look at this period of time right now as the time value of money being very good relative to where we're at for price appreciation, upward price pressure on the uranium spot price relative to the current underlying equity performance. I look at it opportunistically, and I think it would be wise to think about it opportunistically, because the upward pressure right now, the asymmetry to the upside within the uranium spot price, I think is as strong as it's ever been in any uranium cycle. And so it's just a matter of that to break. And you look at the midstream space being conversion, enrichment. You look at the price in that section of the market, historic prices. Typically, you think about fuel cycles where you start off with, you end with fabrication, but you're starting with fabrication, enrichment, conversion, work your way to U3O8. And so, it's all of the things that are lined up. It just needs to break.
Well, I mean, talking of breaking, I wonder if there's a kind of break in the type of thinking that needs to happen in this sector as well. Like, compared to the tech space, it's tiny. And I have people looking at, AI data centers need more energy. And there's some moves about, maybe building some SMRs to kind of, help tech companies secure their energy requirements. But the kind of thinking in that space and the money available in that space to radically shake up this, it feels like a slightly broken sector. It's kind of a very erratic behavior for the past, 30, 40 years in this space. If I'm a tech boss and a tech company looking at this space, I want to kind of smooth those curves and take control of those things. Do you think there is scope for some sort of radical thinking backed by billions of dollars into space like this, where it kind of secures the kind of end-to-end energy requirements, i.e., all of the moving pieces are in the control of like one entity? Are those conversations happening? Can you see that type of thinking coming into our space?
Yeah, I can certainly see that type of thinking. And I think, just to build on that point, I don't think we can underestimate the materiality of the tech sector turning its attention to nuclear energy and SMRs, et cetera. You think about how nuclear energy has progressed historically, utilities, governments, et cetera. The timelines that those groups work on is significantly longer than the timelines and expectations that the tech space has. You're talking about building out data centers, and the momentum and the driver behind that. The timelines are much different. You're talking about needing it now, wanting it now, and needing to secure it now. And so that's a shift in mentality. It's a shift in the ultimate end user and the consumer, so to speak, within our sector. And I could very much see the tech space having to move upstream and secure that cycle, to put a point on it. Very small, when you think about the importance of energy security within that model, and if you're leaving energy security up to an equity market to solve, and smooth out, like as you pointed out very, very accurately, smoothing out those cycles. In my view, it would be a natural progression, natural transition from where we're at, from starting at the SMR scale and then starting to look upstream and starting to secure that entire supply chain.
Yeah, I think it's kind of interesting because I guess that kind of thinking is an important bit, and the money, I guess, also quite important. But we're going to stabilize the sector, but also possibly stabilize the availability and access to capital. And you kind of got to wonder, does that solve for the kind of public market dilemma, which we all experience every day of the week?
Yeah. Well, hey, I think naturally price solves for that, right? Uranium price solves for that. And furthermore, you look at, the space very well. It's a small segment, right? There are very few names out there. There are very few uranium names out there. And so when the attention does turn to the sector, which I don't think it's turned away from, I think you mentioned pregnant pause. Well, I think that accurately describes where we're at. But when the attention does turn, when you start to see price movement in the spot price, and then the reaction in the equity markets underpinning that, it becomes very volatile. It becomes very, you look back to the 2006, 2007 timeframe, became parabolic, right? And that's a function of it being a very small space. There's only a handful of producers. We're in that at scale kind of exploration resource development stage. There's only a handful of us out there as well. And then you overlay what we think about is jurisdictionally. We at ATHA, we have the largest land position and one of the highest grade resources outside of the Athabasca Basin in the North American sphere. And you start to overlay geopolitical risk on top of exploration risk, on top of everything else. And that's driven our business model. There's a reason that we're at scale in Canada because when people turn their attention to the equity space here, as the price continues to appreciate, there are few opportunities.
Yeah, I think it's really, really interesting times here, because these companies with their desire for clean, reliable energy and their sustainability goals and net zero goals, just maybe facilitating this a bit more of a kind of vertical integration in the space, technology driven efficiencies that they master elsewhere, and perhaps this sector of ours, mining more broadly, and I hear specifically uranium nuclear. It'll be interesting for sure, and certainly may help to again solve for the I guess waste management, recycling, specter, that little cloud that sort of hangs over us. So we have to, explain, the full energy supply chain, and beyond. These are the kind of people, this kind of thinking, this is the kind of money that I think we could benefit from. Absolutely.
Yeah.
Sorry.
Yeah, no, I think that part of the industry is really exciting. It's emerging, right? It's in. We're talking about months, not years, since large tech companies have turned their attention to the space. But the fundamentals, though, are extremely robust without that, right? Like we think about that as a generative, the emerging side of the nuclear energy sector. The exciting part for us is that none of it has to happen. It's such a fundamental story right now, where you have demand that has been increasing for years coming out of Asia. You have demand that was demand destruction in the Western sphere, now has switched. That inflection point has passed, where we're now seeing increased demand at a large scale civil, at the size of the civil scale of reactors. And that's already baked in, that's going. And so with or without the hyperscaler kind of tied into that, it doesn't need it. Anything that
I agree.
Anything over and above, Matt, is that we're talking about here is just continued upward pressure.
Yeah, no, for sure. I guess what I'm doing is exploring the latest. Yeah, we'd love a catalyst moment in this space. Yeah. Come on.
Yeah, exactly.
I've had enough of them for the last 5 years. It doesn't need it, but boy, is it useful. It might be, it's kind of useful because, quite frankly, the lobbying and advocacy reach is extensive. Not that we need that, but it all helps in terms of this kind of cultural shift that we've seen ourselves go through in the past couple of years. Right. So more kind of broadly, just kind of like a quick step back in terms of what else is going on out there that's caught your eye, or any of the kind of conversations that you're having in some of these investor meetings and conferences. What else are people talking about?
Yeah, right now, it is everyone's looking at the extremely strong fundamentals that we're talking about, and this isn't cyclic fundamentals. These are generational fundamentals, right? And I think that's the difference. And right now, everyone's just waiting for that move, right? And can't believe the underlying kind of equity performance relative to the macro trend. And there's a lot. I believe there's a lot of built up. There's a lot of built up interest. There's a lot of pent up interest that when we do see a move, I think it's going to be a very violent move.
Yeah. Interesting times, as always. We appreciate you joining us on the Energy Show. It's much loved and listened to. So great to add your voice to this overwhelming surge of interest in the space. Troy, I'll let you crack on with your day. Appreciate your time. Thanks,
Matt. Appreciate it.